Several stories to share with you today about Tesla. First, Bank of America analyst John Murphy just visited Giga Texas and was given a ride on FSD version 13.2. He's now increased his price target to $400. We'll watch a video of him explaining why. Second, legendary investor Chris Camillo explains why he's getting ready to invest big time on Tesla. He says the risk reward is unlike anything else he's seen. He's already got a big bet on Tesla options, but he says that the right timing is still to come. Third, should you worry about Tesla's lagging sales in Germany? Well, it's not really that big of a deal. Finally, the US government just now endorsed Tesla's North American charging standard as the federal EV charging standard. Much less wasted dollars, I hope. So we've got Larry Goldberg joining us. Larry's a multi-entrepreneur and he's traveling the world, it seems. Welcome, Larry.
Hi, Herbert. Hardly the world. I'm in Austin, Texas.
But you do travel quite a bit and you do go around the world. So let's hear another analyst finally did travel and he did go to Austin. He visited Giga Texas. It's the Bank of America analyst John Murphy. He recently visited and they gave him a ride in FSD 13.2 and this is what he has to say now after seeing that.
I guess what questions did you principally want to have clarified by going down to visit the facility, and what left you more optimistic?
Great. Well, thanks for having me. I'm an old school gearhead. I've been doing this for over 25 years. I love seeing factories. So that was the first thing really to see the Austin facility for the first time. So that was great. Seems like it's a really good facility. But I guess probably more important than that was our test drives of FSD in a Model Y. I was in version 13.2, and it was incredibly good through some very challenging scenarios. So that was incredibly impressive. And then the potential for FSD to continue to grow as a percent or a penetration rate to continue to grow over time, which will create recurring profit and revenue streams off these vehicles, which will be far higher than the initial hardware sales. And I think that really is where we got pretty optimistic about what can happen here. And our $400 price objective, our updated one, is the first stop. We'll see how this ultimately goes over time and how things are executed over the next year or two.
Yeah, I was going to say, I mean, it's added like $500 billion in market cap in a matter of a few months. And so the big question there is, the pacing of whatever financial benefit is going to be coming through, whether it's full self-driving and the robotaxi business, and then also just actual here and now demand for EVs.
So I guess there'd be three things I'd point to. First, the launch of the low-cost vehicle next year. That's going to be very important to get out there. The market opens up very significantly in the U.S. and globally, sub $40,000. So that vehicle coming out sub $40,000 is going to be very important, and hopefully that'll be X the $7,500 IRA credit, which is at risk. I think the other two things that are really important is that the potential for Optimus and FSD or full autonomy to really take off are important. And when you kind of sort of dare to dream, like a lot of the growth investors in this name do, I mean, you got a $100 trillion global GDP number, 50% of that is labor, right? So that's the TAM for Optimus. How much of that it actually takes or adds to is huge. And then on the FSD side, you have about 10 trillion miles driven each year on the roads around the world. If you capture 50 cents or $1 in each of those miles, your potential profit is tremendous. So I think, as you look at the two vectors that are going on Optimus on the labor side and FSD on the autonomous side, there's really huge opportunities. And then just one last real thing, the speed of travel has not changed in the better part of the last 80 years. If you're in an autonomous vehicle that can't hit something, there's the potential for the speed of travel to go up significantly. And then all of a sudden you have structural economic growth like the US and the developed markets have not seen for more than 50 years.
I'll pause for a second. Here you've got a guy talking about, his first comment was, it's about FSD uptake. And then he started talking about autonomy and he started talking about robots. What did you think from what you heard so far?
Well, welcome to the Wall Street analysts. Feel free to come into our house. I mean, it's taken them a year to recognize the revolution that's going on. Did you hear him say this was his first visit to the factory? Mm-hmm. I mean, and when he started talking about FSD, it sounded like it was his first trip in FSD.
Yeah.
So, welcome guys, welcome to our party. We have been aware of everything he's talking about, everything, for, going on several years. but definitely at least 1 year. I mean, Optimus is 2 years old. So, it's fantastic to see the recognition. Disappointing he did not mention energy.
All right.
Clearly, there isn't a view of the company as a whole. Did not mention AI specifically, but if you think about Tesla, it's a lot of pieces that fit together like a jigsaw puzzle in a very, very well orchestrated, symphony. I'm getting from jigsaws to symphony, but okay. The point I'm trying to make is that nobody in Wall Street is treating the company as, an entire, philosophy that is being brought to market, and with some of the best management skills we've ever seen. I mean, so you get this outstanding management, you get this outstanding cost control, fantastic manufacturing skills, incredible design, and spread across these disparate but connected product lines. Somebody has got to recognize the total story here, and to set a price target that's well within reach now, given where we are in the stock price, and not to see the future for what it is. It's just another Wall Street analyst. Gearhead, he calls himself. Yes, he is.
No, he's not terrible. Bank of America from 350, decent, to 400, not terrible. Yeah.
But
let's listen to.
We're so close. We're so close to that number anyway.
We're there already. Yeah.
Yeah. So, look, I shouldn't discount a solid, positive analyst report. I shouldn't discount it, but I'm discounting it.
Love it. Let's listen to the rest of the interview.
Yeah, I mean, obviously, you're correct to mention just sort of the dare to dream aspect of that's what this investor base is when it gets excited when the stock goes up. Those are the things that come into play. You do also raise the notion, though, that it has an incredibly low cost of capital based on the stock trading at 100 times earnings. Do you actually think that they might be looking to raise more?
Well, I mean, growth investors are involved here, and they want to continue the company to continue to push the growth envelope on the top line. So raising 5% of the equity, which would be about $55 billion right now, would accelerate sort of the deployment of what they're doing on the dojo side as far as the systems that are necessary for AI on full self-driving and for Optimus. And the reality there is, I don't think anybody would really bat an eye at a 5% dilution. That would be the largest capital raise in history, by the way, but really not that big a deal for a company with a $1.1 to $1.2 trillion market cap.
Okay, I wanted to ask you, Larry, on this.
Now he's speaking.
Because you and I have done shows on this, whether or not Tesla should do a buyback, what they should do with the growth of the cash, how much money do they need, cash do they need to buy AI. He's talking about 5%, $55 billion. Now, they haven't needed it so far. It didn't show up. They built these largest supercomputers in the world, and it didn't make a dent. They increased their cash by $3 billion. Operating expenses went down. Why do they need to raise $55 billion, and would you be in favor of that?
Well, if you're going to run there are several arguments for raising cash. One argument is you're going to build a massive fleet of robotaxis. Second argument is you're going to build a massive fleet of robots, of Optimus robots. Third argument is they're in a capital intensive industry. And so having that cash and being able to deploy that cash in leased assets, particularly given the revenue streams that those assets could produce, is a very powerful argument. Look, Elon is very, very stingy with his capital, with his use of capital. He's proved that again and again. And so I think that's the one reason that they haven't gone out and raised cash already when I thought they would last year. But now is the optimal time The market is flush with cash. There's a lot of cash standing on the sidelines that people are ready to invest. I think a 55 million cash raise would be
billion.
ideal.
55 billion. That's too much. They don't need that.
No. Think about this. What does a fleet of 100,000 robotaxis cost? Figure it out. It's $25 billion. What does a fleet of 100,000 Optimus cost? Another $50 billion. So it's not excessive. It's well within the realms, and you got to strike when the moment's hot. Anyway, Elon, if you're listening, go out and get the money, man.
Yeah, I guess it's free money in the sense that it's not the cost for it so low.
Yes.
What's the difference? But I don't know if they need it. So it's not. It's the negative is less. Yeah.
What about?
Yeah. Okay. No. Good point. Good point. What do you think? Some people are saying, "Oh no!" Some of the bears, they came out and says, "Can you imagine if Tesla announced they need to make money?" They're thinking that they showed the table and they said every time that somebody says that, I can't remember what it was. Anyways, but the point being that Tesla had to borrow debt, borrow money, stock falls. And it's like, I don't think so. If they announce that there's a $55 billion raise, wouldn't the stock actually rise? Like why would people think that?
It would be an event that the market would even, I think I think they would raise money and announce it after they've done the sale. Honestly, that's what I think that would happen. I don't think it would be a blip on the, look, if the stock went down $10, who cares? I know, look, I know there are some retail investors with sport. And $10, the stock moves that much anyway on a daily basis, up or down. These days up, but previous days were down. So I think a stock raise at these prices would be great. Absolutely great. And
interesting, yeah.
Would give them it would put them in, within striking distance of $100 billion. Boy, Elon with that kind of cash, he's so stingy with capital. He's so cautious. Turn that into a gigantic robotaxi fleet, you will own the market globally.
So quickly. Very interesting. I am so glad I got to talk to you about it, Larry, because you're the person I actually trust the most on this. Because again, I've seen all the analysis you've done specifically on. You've had debates with some other people about stock buybacks, use of cash. Interesting. I'm glad that.
But who would you trust with money?
Yeah,
yourself or Elon?
I already do. Yeah. Return on invested capital. It's Elon by far of any human in this on Earth so far. Okay. I got bad news for you, Larry. The next story here is unfortunate. It's Jim Cramer. So Jim Cramer, he is now predicting, he thinks that the stock's going to go to $500. I see nothing in between. The president-elect is telling you Tesla is going to go much higher. I'm so sorry. I'm so sorry this is happening. So let's listen to him.
No, should point out Tesla shares up a nice 3% this morning, Jim.
Well, Tesla's an up stock. That's what I would call it if I were on a trading desk. I think it goes much higher. I think it probably goes to 500. I see nothing in between that.
Really?
500. Yeah, because I think that in the end, remember how I said that the younger people, they made the bet of Bitcoin because the president-elect told you? The president-elect's telling you Tesla's going higher.
Oh, man. Darn it. What do you think?
Well, in this case, it's really President Trump that's telling us the stock's going to go higher. Jim is just repeating it. I guess that's my
okay.
That's
thank
my
you.
fallback
Thank you.
here.
Thank you. Whew, I was worried about that one. Oh gosh. Okay. Well,
I don't know why everybody's down on Jim. I like Jim Cramer.
Well, because he's an inverse Cramer. I mean, if I should pull you up when Elon Musk himself. Yeah, you remember that quote that he said? He was asking about Jim Cramer, and he was like, he was right on. Cramer, he was exactly right. Elon was exactly right. So, all right, this other next segment here is Chris Camillo. He's somebody we both know quite well. I've interviewed him. He's a legendary investor. Chris is known. If you look him up, he's written up. He's been followed along. He was the guy that took a $20,000 account and he made it to be 60 million. He does it through sentiment. And he also, he was part of the the
Social art.
GameStop
Social art, yeah.
social. Yeah, he looks at he was the first to kind of like follow social media sentiment, and then that's how he makes decisions. But he was also part of the GameStop event and all that. He's anyways, let's listen to his recent thinking about all this.
But now I'm uncomfortable. Now I'm not going to sleep as well. And I didn't want this for myself. I really didn't. But here we are. So we're in this together. And this is there's very few times where you get into a situation where the reward risk profile is asymmetric. I believe that exists with Optimus. But Optimus isn't here yet to the degree that I want it to be.
Did
so
you see
now,
the videos of Optimus catching a ball thrown at it through human control?
I thought that was impressive. I thought it was interesting. I still, like, where are they focusing their energy on Optimus? Are they really focusing it in areas where commercialization is extremely important, or are they optimizing the algorithms, right, for certain things that maybe aren't as important but are super impressive because they know it will impress Elon and impress the world? And by the way, I am not saying that that's a bad idea. And if they have enough resources at Tesla, and they might, to do both, then go for it, right? Like, make sure that that thing is optimized for fleet autonomy with commercial style work. But then if they also have people on the side saying, hey, make Optimus do really fun, cool things, like I want it to thread a needle, I want it to be able to autonomously catch a ball. Wait, dumb money. What do they say? Does not. I do.
Say we don't read the comments. I was just pointing out that we're reading them. I'm putting some on the screen.
I'm trying to read them and talk. It's not easy.
Okay, I don't know. Sorry about that. All right. All right. What do you think of what he said so far? Like, so Optimus is what his real bet is. He's actually already put in a big options play, but he's just timing it even more. And he's saying he's feeling like he needs to throw in more.
Look, Chris Camillo is a hero to me. He's a brilliant investor. He's also a great talker. But, he's making a bet of his lifetime. And, you got to trust, we joked a little bit about Cramer, but Chris Camillo is somebody you can trust. I mean, I do. I've found his advice to be very good. Now, I don't really take these short-term bets that he takes, and so I don't often bet alongside him in those kinds of bets. But when he's making the call of the century, call of a lifetime, you have to go with it. You have to go with it. And since I'm already, since this is already my biggest single counter, I'm probably going to add. And going somewhat against my philosophy in terms of risk, but I'm probably going to add anyway. It's very hard when Chris makes a call like this to not follow that call.
Yeah, I agree with you. So I want to separate out a couple things. So what you just said, right? So Chris Camillo, there's two kinds of bets he makes, right? The kind that you and I do, which is long-term bets. We find a stock, we invest. But he also plays the option market because he does want to optimize he said that word a couple of times, his gains. He's willing to really risk it. So when he's actually already identified humanoid bots as the single biggest change in the world, an opportunity in the world that's only comes once in a generation kind of thing. And so he's already invested, as you and I have, in multiple humanoid bot companies early. Like, we saw this early, we wanted to be part of it. And you are not late if you invest in Tesla now to try to get into the humanoid bot space now. He's already made that bet, but he's timing it because he is playing the options. And not that, you and I may not care about that, but he is doing that. That's when he says, when he goes, he's being forced a little bit to throw his hand a little early. He's kind of timing. Let's listen to what he says here about that specifically.
Easy, because I'm a marathon talker and I got to be a marathon reader and talker at the same time. It's hard, guys. I'm trying to. At the end of this episode, could we just spend some time dealing with comments then? because I don't want to ignore people's comments. Guys, we'll try to get to them at the end of the episode, I promise. Yeah, you think I'm overthinking this, guys? Guys, you have no idea the how much. If I told you how much money I have in Tesla options right now, and my trade is not even a third on fully, you would be overthinking it as well. Okay, like, so it's a lot of freaking money, guys. It's a lot of risk. So anyway, I forgot what I was saying. I'm sick, by the way. I've been sick, doing this sick for days.
Okay, well, sorry, let's move on. Sorry. Okay, so anyways, he was just spending a little bit of time talking about Optimus. How was the juggling? And he said, well, sometimes you got to do it for the audience and for Elon to just excite everybody. Sometimes are they, is that taking away time from the actual important work? And that's where I think he might be wrong there, or he hasn't seen it, which is every time you teach and the bots to do anything from teleoperation to autonomy, to autonomous work, even if it's catching a ball, all of that ends up being very valuable for multiple tasks in the factory, multiple tasks that you would be able to sell money for. So I'm not sure that it's it's just for.
I saw his remarks about catching the ball. The key to that catching of the ball was they were testing the dexterity of the fingertips.
Yeah.
And so that was a test that they used to test that. Look, I saw Chris yesterday.
Yeah.
And had a long chat with him. He's right there. I mean, he's very committed. He's all in on this Tesla bet.
Yeah.
And honestly, it's very hard to counter what he's saying because he has such a sense of timing. He has a perfect sense of timing and very strong track record.
And to clarify, he's told me also that he was not an investor in Tesla. He was not excited about the electric vehicle revolution. And in fact, he wasn't even that excited about FSD. He thinks autonomy is going to be great. It's going to succeed, but he wasn't there to invest in that. It's the bot that made him realize that this is a bet that he needs to make. So he was like not a Tesla fan. He's more of the bot fan. And of course, Tesla's the leader. So he's going to invest heavily there. And then he did just have an interview recently where he said when he saw version 13 and he realized now that is the sentiment has skyrocketed. And now he's going to it force his hand to invest in Tesla because of autonomy, not just because of bots. Okay, so let's come back to the not important story, which is the auto business of Tesla. Some people still keep focusing on falling sales and how Tesla's in trouble. So you've got Troy Teslak here reporting that in Germany, the sales for Tesla in November fell. It's now only at 33,000, down from 60,000 from last year. So that's a decrease of 26,000, which is 43% reduction. So that says if you're a Tesla fan from Germany, he'd like to know why Tesla sales might have dropped more than other electric vehicles. So in blue is 2023, Tesla sales in Germany, and now in red, here we are, much less. And he's saying that it's a lot less than other BEVs. What's your thoughts about what's happening in Germany?
What's happening in Germany is very simple. The German auto market is in terrible, terrible trouble. Terrible trouble. There are a lot of EVs were sold last year because the government subsidies were expiring at the end of the year. And so there was this jump in EV sales. And then this year, the auto companies are in terrible trouble. And so they are pressing very hard on moving cars through their distribution channels, both their EV cars as well as their standard cars. So that really accounts for A, the falling sales of Tesla, and B, the falling sales of EV cars, which were exacerbated by the ending of the government subsidies. So you get this double whammy on Tesla. One is the falling the government subsidy, but the second is the German manufacturers discounting dramatically to their corporate customers, and corporate customers are 54% of the sales in Germany.
Yes.
I was going to do a whole story about the German auto
Thank
sales.
you.
And in fact, what's happening in Germany is critical. I mean, you have no idea how badly Mercedes are suffering. You know, AJ, any subscriber to AJ on X will understand the story, but Mercedes are bleeding cash. Volkswagen are, they're practically dead. So you've got this enormous pressure from the German OEMs to pump into their channel, and their channel are basically corporate buyers.
Yes.
As many vehicles as possible. So Germany's a special situation. I will write to Troy and try and catch him up on the situation. I really should do that special on German autos. I may publish it on X. I've had really excellent information on it, and just a lot of stuff happening this year.
Thank you for doing that. Yeah. This is why you know things. I appreciate this. I just did an interview with AJ that'll come out this weekend, and boy,
Good.
He just blew me away with all the financials. It's the most complete, detailed revenue, PE, earnings, and stock forecast you could ever see. It's unbelievable.
He is gold. He is such a great asset to the community. He is gold.
That's AJ, ALOJOH. But the good explanation of what's happening in Germany. So should we worry? Well, here's Roland Percher, another person on X that you should be following. He's great. And he said this: don't worry too much about poor Tesla sales in Germany. This chart should bring in perspective where Tesla sells 1.8 million cars a year. So Tesla sells 1.8 million cars a year. This is year to date till November, and Tesla sales by country. And you can see that it's almost all US and China. That's who it is. And then you got UK, you got Canada, you got France. I mean, if you can sell more cars in Canada than you could Germany, that's like, that's shock. It's not as important as everybody thinks it is. And it's just tiny.
I'll tell you what will change German sales. I'll tell you what will change in Europe, actually. Europe will become much more important. When we bring in the lower cost car, and, gentlemen from Bank of America talked about sub 40,000. That is going to have a big impact in Europe. But that I don't think we're going to see those sales in Europe before the end of 2025. So, it's going to continue this way for a little while.
Okay. Another story here is apparently the U.S. government has announced that they are now going to adopt Tesla's supercharging network, the NACS. It's going to become the official U.S. federal EV charging standard. So this is the U.S. government said this. This is Kristen White, acting federal highway administrator. She confirmed that the shift at a recent Alliance for Automotive Innovation conference, that federal agencies would soon issue updated guidance to incorporate NACS into federally funded EV charging projects. In the coming weeks, you'll be seeing an update from federal agencies on what we call the J3400. That will be the standard moving forward. And then she said that the transition will occur within the framework of existing regulations, so they don't need to, they don't need new rulemaking. It's an automatic thing. So it's a good thing, right? I mean, gosh, it's like, it's ridiculous if you think anything else at this point. NACS has won the game. Don't waste your money. Go ahead and support this standard. Everyone else has.
Well, we forecast this over a year and a half ago originally. We knew it was coming. We knew it had to come. And then Ford really broke the ice. And so, it's good to have it finalized. It's good to have it official. There are a lot of other standards that car makers could adopt from Tesla, and we've spoken about them at length. It's interesting, but I'm wondering if the highway administration are trying to front run, what's going to come down from the new administrator from the new administration. So it'll be interesting.
It would have happened anyways. Okay. Thank you so much, Larry. Appreciate you. Perfect stories. And the next one is going to be a very interesting show that we're going to do on XAI, Tesla, and OpenAI. But this was great. Appreciate you, Larry. Follow him on X at Tesla Larry. As you heard here today, he does deep dive research on a lot of topics. And that's why we bring him on to share what he found. Thank you, Larry. Talk to you soon.
Thank you.
Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.